you probably are aware, came within just a few $100s of the $100,000 mark at the end of last week. Joining us now to talk about what's next for Bitcoin, other crypto, Anthony Pompliano, founder and CEO of Professional Capital Management. You're a viewer. You saw both Michael Saylor and the other individual. I have to look up his name to find it again. But I thought it was really interesting that the usage case for Bitcoin in a portfolio, it can augment certain conservative strategies. And I'm wondering, are we going to see more of that? And is it for fiduciaries and for pension managers and people that, he was talking about narrowing the liability gap for state and municipal employees and their pension plans using Bitcoin to augment the return. Is that prudent in your view?
Well, I think there's a couple of things going on. First of all, when you talk about corporations, historically, they've had two levers to pull in terms of improving their business. They can drive more revenue or they can cut expenses. What Michael Saylor really introduced is this idea of taking your balance sheet and creating a third lever that you can pull. It's not really that new. Real estate has been doing this for a long time, where they use that to secure loans and do other things. It's just that we haven't thought of software companies or others being able to do the same thing. And so now you have an asset that obviously is growing very quickly. There's only 21 million of them, and it seems to be working out. Now, what I do think is interesting is because there's only 21 million of these, anyone who buys it, if there's increased demand, the price goes up. And so, we had a fund that was anchored by two public pension funds that we raised in 2018. We bought Bitcoin around $5,500 for those public pension funds. They're up really big on it. And so I do think that anytime you buy an asset, whether it's Bitcoin stocks, commodities, real estate, et cetera, and it goes up a lot, it will help close those funding gaps. Now, what I do think is really important, though, is Bitcoin in particular was a bottoms-up adoption story. So historically, technologies are top-down. Governments and militaries adopt it first, then corporations, and eventually individuals. Here, you actually had individuals first. The reason why that's important is Bitcoin is the only asset that I know of in financial markets. As the price goes up, it becomes less risky. And so now you have the biggest pools of capital showing up and saying, it now is only big enough where I can start to buy it. And so you have central banks, you have public pension funds, et cetera, that are saying, okay, now we're getting close to $2 trillion. I can start allocating to this thing. And so individuals front ran it, but the largest pools of capital still are heavily under allocated to this asset. I think it's going to be very good for price.
So to augment a fixed income investment for an insurance company or pension, there's some underlying Bitcoin that has to rise. I think he said over a 4-year period, it has to rise 6% per year. Do you remember that? That's what it said and you'd break even on that. Anything above that, you're augmenting the return because rates have been obviously so low for a lot of these fiduciaries that are trying to guarantee retirees or whatever, a certain income. So you would take that bet. You don't think it's going to be 50,000 in 4 years.
Well, what I think is really important is if you go and you look at the data of putting just a little bit of Bitcoin, you don't have to put a lot of Bitcoin. We can put 1% of Bitcoin into a portfolio. It not only has the price appreciation, but it also drastically improves Sharpe ratios and many other aspects that these fiduciaries look at. Now, I do think that the underfunding or that funding gap for public pension funds and many other these large pools of capital is drastically under-discussed. What are they going to do, right? They don't have many options. And so it doesn't mean that you should go and throw a Hail Mary and put 50% of your fund into, some risky asset. But it does mean that if you can take a risk reward asset, which according to Fidelity has been the best risk reward asset over the last 10 years, and you can put that in your portfolio. We're talking about right now you have it at zero. Just get off zero and put some.
The interesting thing about the gentleman who presented this to us on the real estate asset side of it is he shares in the upside potentially, doesn't take any of the downside risk.
Correct.
The downside risk is entirely taken on by the individual taking out the mortgage or the loan on some of these things that come through. And that's a pretty good deal. I would like to take something where I get to share on the upside and have none of the downside risk too.
I think there's two main stories going forward that we're going to see. The first is Bitcoin is just now entering into the financial world in terms of traditional finance. There is nothing better that Wall Street likes to do than create financial instruments. And if they can now introduce Bitcoin into those financial instruments, they're going to find creative ways to do that. The second thing is that MicroStrategy has now pioneered this idea of using a balance sheet. And so I think that there's going to be many companies companies that are going to do this using other assets as well. In Canada, there's companies like Soul Strategies, Hut8, DeFi Technologies, et cetera, that are all putting these assets on their balance sheet. And they're saying, I'm going to control revenue, I'm going to control expenses, but now I'm also going to go on offense using that balance sheet. And I think that that is something that is going to permeate not just in public markets, but we're also seeing small businesses start to do this. I have multiple people who have reached out to me describing this, and I think it's going to become a big, big story in 2025.
Again,